The average Toronto home just plunged over $60,000 in 1 month from June to July. Now, will this trend continue? And what is the Toronto real estate market going to look like for the rest of this year and going into 2025? In this video, we're going to take a deep dive into the numbers that just came out for July and look at some key indicators to determine where the market's headed. If you're new to this channel, my name is Sid Sur from Team Sur Real Estate. I help clients with buying, selling, leasing, investing, as well as first access to pre-construction condos. If you haven't already, please go ahead and subscribe for all things real estate. So let's get right into it. So I'm sure you guys are seeing news articles and various news outlets, social media outlets, responding to the month-over-month declines of over $60,000. It's no surprise that a lot of that is due to the fact that we are in the summer months. The summertime is a slow time in real estate. And of course, we also saw the Bank of Canada raise their key interest rates twice this summer, which is also bringing down a lot of activity and just putting buyers on the sidelines. If there's one thing I've learned trading in the Toronto real estate market, it's that buyers and sellers really respond to news more than anything else. The economy and particularly real estate is really driven by consumer confidence. When you see news about the rates going up, buyers lose confidence, there's uncertainty, there's doubt, and they take a step back. Same thing happens with sellers. When there's news of a rate pause or possibly just a small rate hike, then it brings confidence back into the market and we see activity pick back up again. And we're going to look into examples of that shortly. But first, let's look at the year-over-year stats. The average price in July sits at $1,118,374, which is a 4.2% increase from July of 2022. Nice modest increase there. Sales sitting at 5,250, which is also almost 8% higher than July of 2022. And active listings almost identical at over 15,300 this past month. So year-over-year price increase of 4.2%, you might be thinking, well, that's great news. Prices have gone up year-over-year. Look, if you know me personally, then you know that I don't like to look at real estate from a short-term lens, year-over-year, month-over-month. To me, that doesn't matter. I look at the long-term lens when it comes to real estate, right? 5 years, 10, 20 years. But it is important to look at these stats every now and then because it gives you an idea of how the market's behaving and where the market's possibly headed. Last year in particular, we saw the Bank of Canada raise rates for the first time in a very long time aggressively, which brought a lot of uncertainty into the market. And by the time we hit the summer months of June, July, and August, we saw the activity slow down and come to almost a complete halt. And the market went through a major correction at that time. So looking at the year-over-year numbers is not really that accurate in my opinion, even though it has gone up over 4%. So now let's look at some month-over-month numbers. In January, we saw the price come up over 1% from December of 2022. And in February is where we really started seeing a uptick in pricing. We saw in February pricing go up over almost 5.5% month over month. And that, in my opinion, is largely due to the fact that in Bank of Canada in January decided to do a modest 25 basis point increase, which was the lowest increase they did in a very long time. Again, going back to my example of consumers responding to the news and confidence coming back. So that brought a lot of buyers back into the market. Then we go back to March, we saw another uptick. That's when we really started seeing the market pick up for two reasons. Number one, we were hitting the spring market. And number two, the bank decided and announced a rate hold back in March. So that really brought a lot more buyers back into the market. And that we can also see reflected on the number of sales hitting over 7,500. And then in May is when we really saw the peak of the market, the average price sitting at $1,196,000, which was a 3.7% increase, and sales at over 9,000. And then we had the Bank of Canada rate announcement, and we started seeing the values drop a little by little. And now we're sitting in July with over almost 5.5% decline month over month with only 5,250 sales, which is very low. But the good news is, compared to January of this year, we're still up in price. I think we're going to see more or less of the same in August. We're probably going to see a little bit more decline in pricing in August because, again, August is also, again, summer months. People are out vacationing. People are not really thinking about real estate. Market's uncertain. They have a lot of doubt. So we're probably going to see prices stagnate, possibly even drop a little bit more. There is one thing I want to address looking at this chart, and that is the surprising fact that values have not dropped any further, in spite of the aggressive rate hike that the Bank of Canada has done. We're at a 22-year record high interest rate environment. and values still haven't really dropped, or market hasn't really crashed like people were expecting it to. And that really comes back to the point I've been making in all of my videos, and it's no, surprise, and that goes back to supply. We have very low supply in not only in Toronto, but in all of Canada in general. We have a really strong job market, we have strong population growth, and on top of that, inventory is low. When you mix up all of those together, you see prices sort of being resilient. In order for us to really see that big crash or major market correction, we're going to have to see an oversupply of inventory in the market, which we're still yet to see. Right now, as it stands, we're just over $15,000 in active listings in July, which is very similar to last year. I'm curious to see personally what starts happening in the months of September and October, which is our fall market, to really understand where the market's truly headed. If we start seeing a flood of inventory come out in those markets, and if sellers are starting to feel a pinch and are actually forced to sell because of their variable rate mortgages, putting a dent in their pocket every month, then I'm curious to see where prices will head. I've seen one-off news articles about certain sellers in certain markets who are forced to sell because their monthly mortgage payments went from $2,800 to over $6,000 a month, making them essentially house poor. But those are, again, one-off cases. We're not seeing that in mass. We're not seeing that in volume. We're not seeing thousands of sellers come out or hundreds of sellers come out and be in that position just yet. However, I think the rest of 2024 and even 2025, we're going to see a bit of a bleak and slow market. But I will be curious to look at the inventory numbers coming out in the next few months to see where the market's actually going to start heading. Keep in mind too, when you see these numbers come out from the Toronto Real Estate Board or any other board, this just gives you a broad overall macro picture of what's going on in the market in general. Toronto is comprised of numerous micro markets where activity is different and markets behave differently depending on, again, the neighborhood and the property type that you're buying or selling. For example, right now, I've got some two-bedroom condos in that $800,000 to $900,000 range, which have been sitting on the market for slightly longer than they would have back in the spring. They're taking a little bit longer to sell. But when you look at the low-rise inventory like detached and semis, there's still quite a shortage of inventory in the South Etobicoke market. And those are moving a lot quicker. We're even seeing multiple offers on many property types. So again, if you're a buyer, don't be fixated on the numbers that you see. You really have to look at A, what neighborhood you're looking to buy into, and B, what property type you're looking to buy into. If you're a seller, you need to ask yourself if you're upsizing or downsizing and which neighborhood you're doing that in. You need more context when you are trying to make a decision on what you should do next. If you're a buyer, you will probably see some deals on the market right now, but again, focus on affordability and seeing A, if you actually find a property that you like, and B, can you actually afford it on a monthly basis? Long term, you are going to be just fine in this market. We have record number of immigrants coming into the country over the next few years, and we're not building homes nearly fast enough. And this shortage of supply is going to be the trend moving forward for at least the next decade. In the short term, we are going to see ebbs and flows and bumps along the way, but long term, we're going to be just fine. So guys, I hope you found some value in this video. If you did, please go ahead and give it a thumbs up, and let me know in the comments where you think the Toronto real estate market's headed. Thank you guys for watching. Take care.